I want to give you a glimpse behind the curtain. Who am I and what are you looking at? I am Bagadon at stockmarketcaddy.com, and today is February 5th at 9:50 p.m. And as we go into February, we've had one hell of a January. The markets have been up, the markets have been down. And throughout that time, we have been showing you snippets or snapshots of a timing model, a trading model that we like to follow. And let me sort this so it's not moving on us. This model is based upon an algorithm that we have written that trades each individual market based upon what the VIX is doing and what the 10-year bond is doing. And in a moment, we're going to drill down and show you the results year to date as well as the last 12 months. But before I go any further, let me just say this. I am not a broker. I am not a financial advisor. I am not collecting monies to manage your money, not in any way, shape, or form. Nor am I making any claims going forward what this model is going to do. I cannot do that. Even when we follow it, there is no certainty in the market. There is no holy grail. There is no Bible code. What we are is a mentoring site, a place where like-minded traders can come together, whether you like to trade stocks, options, futures, forex. Our position is this. We believe that whatever is known in the market is known by everyone else except us. You might say, we are not the smartest guys in the room. We might be some of the dumbest. But the truth of the matter is, our members are some of the smartest people you could ever meet. We know long before GameStunk and long before the Fed that this was a game, a rigged game. And we're playing against people who have supercomputers, super market intelligence, and super hyper communication links. That said, our objectives are rather modest. We want to come into the market each and every day, each and every week, each and every month, and make a little bit. It is a business. The markets go up and they go down. There's buying and there's selling. There needs to be liquidity in markets. We didn't create the markets. These are the markets that have been created long before us. So you might think of our role. When we put our capital at risk, we are providing a market. We are a functionary of the markets. Like it or not, that's what we are, and we're just fine with that. Now, we make it on a golf theme, but we're not whimsical. We're very serious about what we do. So yes, this trade, all of our members, let's see if we can sort it here another way. Here we go. This trade went off on February 2nd, just 3 days ago. And all of our members, and if you were a member, would have had an opportunity to go short the VIX and long all four markets. And yes, if you had just one mini contract, you would be up this week 16,520. If you put on 2 contracts, 3 contracts, you can do the math. Had you put on 1 micro contract, well, the VIX does not offer, I do not believe, a micro. So you would have been up close to, maybe somewhere between $1,000 and $1,600, thereabouts. A micro is 1/10 of a mini. So I know what you're asking. What is this performance? What is this necklace? Let me show you. Okay, so hopefully you have a pencil ready to jot down some information, because I want you to keep note on this. This is the chart that is running the Nicholas timing model. And before you say, oh, I know what he's doing, he's trading the Bollinger Bands. No, we put the Bollinger Bands on here just to have perspective. The truth of the matter is, I cannot tell you by visually looking at this chart when it's going to trade. Why not? Let me show you. I'm going to give you a glimpse. We're going to come here to data, and we're going to edit symbol. Do you see the data stream number 1? That's the ES contract. Data stream number 2, that's the VIX contract. Data stream number 3, that's the 10-year treasury. There are 3 data streams running into this chart. There is an algorithm running on all 3 of those markets and making a decision to buy and sell these markets. This algo was written now a few years ago. It was back tested back years. Prior to 2008, 2009, from earlier 2008, from the year 2000 to 2008, this model would not have done well. How do we know? Because we've back tested it. But since 2009, this model ran very, very well. We ran back tests and we ran forward tests. And when we ran the forward test came back and said, you know, this model is likely to run better than the back test. And quite frankly, it has. But let me show you. So the numbers that I just showed you, the 16,000, this is running on the ES, the NQ, the YM, the Russell, and the VIX. And I am about to go into the performance report and show you what it has done year to date, just in January, and what each one has done for the last rolling 12 months. Now, please understand, this is going to show what the model did from point to point. As you can see here, it shorted here. It came out here. It made whatever it made. The reality of it is there was plenty of opportunity down here for our members to score or to bank much, much more money than what the model actually did. But if one was to have followed point to point, I'm going to show you now the results. And let's do that. We come to the performance report, and there it is. For the last 12 months, this contract alone has had 35 trades, and it has net $119,121 and has been profitable 54% of the time. So I am going to write that down, 119,121, and then month to date, or the year to date, it has lost. It has in fact lost $749. Let's go to the NQ and look at the exact same number. The NQ has made in the last 12 months $164,861. This month it has made $5,586. By the way, this is very important. These profit factors, percent profitable, but profit factor is very important. We don't have time here with limited YouTube. The YM, 95,246, and this month it's lost 2,859. Let's look at the Russell. The Russell, last 12 months, $56,786, and this month it did in fact lose $799 if you played it point to point. And the VIX, 17,000 096, and this month it did 884 for losses. What is the total? So the totals are the following. For the last rolling 12 months, if you took every signal and carried it through to its conclusion, did not scalp it, a mini contract in each market, it totals $443,110. This month, if you had followed it all the way through, the net is just $295 for the month, positive $295. The reality of it is these trades, as we just showed you, had significant run-ups and ample opportunity for our members to have banked more. What does that mean? It is a model. It does not predict the future. It may or may not perform in the future, but it gives us something to shoot against. With this type of information, we can get an idea how frequently it's going to trade, how much the run-ups will be, how much the rundowns will be, and from there we can get empirical, objective information about how to manage the trade and to bank the profits. I'm running out of YouTube time. If this approach interests you, feel free to give me a call over the weekend. I'm Don Marshall. You can reach me at 813-758-8263. This is just one of our algos. We have well over 60 proprietary indicators, strategies, radars that approach the markets in a mechanical, objective, consistent fashion. And for our annual members, these programs can sit and rest on your computer as they do for our members. If you want to listen to Neil Cavuto tomorrow, Maria Bartiromo, the IBD, have at it. That is not how we approach the markets. Is it a game? We don't really think of making money as a game, but it is a game of probabilities. To that extent, it is a game, and that's exactly what we do. We play the probabilities in a mechanical, repeatable fashion, in much the same way that a golfer must have a swing that repeats. Thank you.